Man, oh man, stocks are getting worse, guys. We're selling off all across the board today so far. It's about 11 a.m. when I'm filming this video. We have the Russell down 1.4%. Rough day for the small caps to start off today, guys. The Nasdaq's down 1.2%. S&P's down 0.9% as the Dow is down 0.7%. And we have the VIX up another 5.5%. Let's just dive into the video, guys. We're going to break down a bunch of charts in this video like we always do, stocks, and we're just going to go over what I'm looking to do in the market. So right now, SPY is clearly trading in this wedge still. We can clearly see we've been making lower highs. Obviously, you guys all know that. 431, we hit that. We peaked at around 410. That was a couple weeks ago. Then we just recently hit about 400. All these are lower highs, and at the same time, we're making higher lows. And this goes for triple Q as well. If we pull that chart up, and you guys know SPY's the S&P 500, triple Q's the Nasdaq 100, we're seeing the same thing. Lower high after lower high after lower high, but at the same time, we're fighting to make these higher lows. So we're in this wedge. We're digging pretty much deeper into the wedge each, it seems like day that goes by. So, this is the moment of truth for the bulls here, right? Are they going to see a push at these moving averages, which right now clearly doesn't seem like that's happening, or are we just going to fall right through, and fill the gap down here? Triple Q maybe down to about 260, 265. SPY, maybe if it fails today, well, it is failing today, but if it gets even worse, maybe this starts going down 378, 380, 385. This is where it could be going. So it looks like clearly the rally that we had from the 5th of January to about the 17th, just a couple days ago, 2 days ago, clearly that was a bull trap, as of now. And, the past 2 days, if we pull the 5-day up, you guys can see this SPY is down 3.2% from 400 now to about 387. And triple Q in the past just, since yesterday morning, about 28 hours ago, this thing was at, 284. Now it's at 275. It is down about 3.7%. So we are seeing a lot of selling coming in other words, guys, on the S&P and the Nasdaq. And let's pull the Dow up very quickly. If you guys remember, which doesn't always happen, yesterday the Dow Jones had the worst day out of all the indexes. And we can see the Dow is at 34.3 on the 13th of this month. Now it's at 33 flat. I mean, this thing's down 1,300 points in a couple trading days. We're talking 2 trading days, 2 full trading days, including today, not including today, which we're only barely halfway through the day. So not even 2.5 days of trading. Dow is down 1,300 points, 3.8%. Very big drop there, in the Dow Jones. And if we pull the 4-hour chart up on the Dow, this looks pretty toppy, does it not? I mean, you can see back in the middle of August, we hit 34.3. We failed. Here back in the end of November, we failed there. We tried breaking out in the middle of December, but we failed. And here we are again. We hit 34.3, failed. Now we're, about to collapse potentially under 33,000 points on the Dow. So, yeah, VIX is now up over 6%. Metals are starting to move. So we're seeing safe haven assets move. Gold's up 0.6. Silver's up 0.3 right now on the day so far as, guys, I said we're almost halfway through. We're not even halfway through the day. We're barely even 2 hours into the day so far. So, yeah, this is not looking too great for the bulls as of now. And if we pull up oil, let's see what's going on here on oil so far. This is starting to push back over 80 a barrel. Look at that. Oil's up 1% here, and we're still in this sideways channel that we've talked about, but we could be testing 82, 82.50, 83, and if that starts to break, we could be getting a lot more upside on crude oil. As you guys can see, 82's been resistance since the middle end of November. That's where it looks like this thing wants to test. Maybe today, maybe at some point tomorrow, next week. We shall see, guys. Let me know your thoughts, as always, in the comments down below. And, of course, if you're finding value, hit that like button. And if you haven't, for some reason, subscribed yet, make sure to subscribe. I think we're like 4 or 5 subscribers away from 26,000 subscribers. So if you haven't done that yet, let's try and get the 26,000, guys. I appreciate you all, as always. And let's just dive into some stocks now. We had Procter & Gamble report earnings this morning, which is up 0.25%. And did I not say this in the video yesterday? I said how Procter, I mean, they were extremely oversold heading into earnings. Earnings would have had to have been awful for this thing to fall even more. And it looks like, it saw a little bit of a drop in the pre-market to about 140, but we've since recovered all that loss, and we're now up. So if we pull up the live news tab and scroll down a bit and see what Procter & Gamble actually did, and the ticker symbol on this is PG. If you guys for some reason didn't know that, which is okay. I mean, it's okay if you didn't know that. That's why I'm telling you. It's PG. Let's pull it up here. Let's see. Give me a second here, guys. Come on. Where are these earnings at? Looks like they ended up doing $1.59 in earnings per share on revenue. Where the heck's the revenue at? It's hiding from me here. $20.8 billion, guys, revenue, and I'm not sure what that was or if they beat the estimates or not. Oh, here it is, guys. 159 EPS was in line with the estimates. Sales came in again, $20.8 billion, which beat the $20.73 billion estimate. So they actually beat EPS, or inline EPS, beat revenue, not too bad. And it looks like a year ago EPS was $1.66, so that's down a little bit on an adjusted basis year over year. Sales fell about 0.9% to $20.77 billion, and I think the estimates, we talked about this yesterday, I think the estimates had Procter & Gamble declining by over 1%, I think 1.5% on revenue. So the fact that that wasn't the case, that's a good sign. That's good news. And we can see here, anything else on guidance? Full year 23 organic sales growth guidance they actually raised it from 3.5, what am I saying? I'm mumbling and jumbling. Up 3 to 5, geez, guys, up 3 to 5% to 4 to 5%. So they're upping their organic sales growth guidance, which is always good. And it looks like here Berenberg Bank adjusted Procter & Gamble's price to 133 from 122, maintaining hold rating. All right, not bad. So inline EPS beat revenue, organic sales growth better than the estimate, or they're rather raising that, which is good. So I wouldn't be surprised if this continued to see a bit of a rebound here. If you guys take a look, we've seen this 143-ish level, we've seen this be a big point over the past couple months. It's been support, it's been resistance, and clearly now, we're holding it as support, starting to bounce towards the moving averages, and we'll see if this rally has more legs to it, or if this is just it. So let's talk about some other ones I have on the list here, some ones that are moving today. Of course, we have Netflix after the bell. Watch out for that, guys. Not going to talk too much about that. Already talked about it. They're reporting after the bell tomorrow. Today we have, today, not tomorrow. Today, if I could talk to, geez, guys. What's going on today? What the heck is going on today? Alibaba is up 3% on the day. It is starting to now bounce off the 50 SMA, and to me, it's slowly starting to look like the uptrend is continuing. So keep your eyes on it. There's, of course, and this is like a tricky spot for these Chinese stocks, because there's a lot of optimism here on these Chinese stocks, with economy starting to look a teeny tiny bit better now that the restrictions are starting to be alleviated over there. But this could turn on a dime. I mean, to my understanding right now, it's the Chinese New Year. A lot of traveling is going on. So is there going to be a surge in cases, or is the CCP going to be like, oh, we're going to have to restrict for a month now? Anything could happen that could really send these stocks down, and this rally that we've seen could be over like that. So keep that in mind. Keep that in mind, guys. It's very important to understand that when we're dealing with Alibaba, which is up from $58 to now $116. When we're dealing with Tencent, which on the day it's up 2.7. A couple months ago, the stock was at $24. Now it's at $50. When we're dealing with stocks like these that are up a ton, there's a lot of optimism, and we know that it can turn on a dime. We have to be very cautious. Approach with a ton of caution. Let's just say that. And we can see Tencent now. Another thing worth mentioning on this one, it is at a big point of resistance if we pop the yearly chart up, which you guys can see, $49.50, $50. Yeah, we fail at that point every time since the middle of March of last year. So watch out for that, guys. We have stocks like Meta and Google moving up today. Let's pull up Google. It's up 2%, which It's great. I mean, that it's up on a day that the markets are red. That's awesome. But you guys know it's my biggest individual stock holding that, quite frankly, I want to add more of. And I want to buy more of it under $80, which it's running away, which it doesn't really matter. I mean, at the end of the day, I'm not planning on selling it. I don't want. It's not like I'm like, oh, I want it to move because I don't know. You guys know what I mean, right? It's not the end of the world. It doesn't really matter. I'm looking at this from a long-term perspective, but I just want to accumulate as many shares as possible in this bear market. Within reason. Obviously, I don't want it to be too big of a position in my portfolio. I mean, I kind of have a rule now that no individual stock is going to make more than, I'd say, like 7-ish, 8% of the portfolio. A couple years ago, I'd do like 20%, which is just ridiculous. I mean, I think, it depends on what style of investing you have, of course. But for me, when I'm looking at long-term investing, trading aside, long-term investing, now I'm looking at it like no individual stock's going to be more than 6, 7, 8%, unless it's, I don't know. I mean, unless something crazy happens in the future, we don't know what's going to happen. But for me, I'm going to stick to, these certain rules, these guidelines, and now it's like 7, 8% within reason. I'm going to be buying Google within reason to keep it in that ballpark. And I'd like to get it under $80, which now it's at 93. We'll see. Who knows? Maybe in 6 months it'll be at $70 for all we know. But now Google is up 2% on the day. Not too bad. Meta is also moving up, which is another holding of mine that I was buying not a long time ago, but within the last year I've accumulated shares. And now it's actually at a point where I think I'm actually pretty much green on my Meta investment. Isn't that crazy, guys? This thing I was buying, gosh, I mean, I started buying, I think, initially when it crashed. If I pull the yearly chart, do you guys remember when this thing crashed from 330 back in February to, almost a year ago, down to about 240? I think I started buying, right here, no joke. My initial nibble, I know it's crazy, but I'm being honest here. I'm not BSing like a lot of other YouTubers, right? Initial nibble was at 225, and then I just bought all the way down. I couldn't tell you how many times, honestly, that I bought Meta. For sure, over 10 different buys, tranches, if you will. I don't know how you want to put that. You guys know what I mean. But the initial nibble was right around 240, or maybe 230, 235, right in there somewhere. And then I bought all the way down, of course, under 200 in the 180s, 70s, no joke, all the way down, 130s. And then, of course, I went heavier on the way down. I mean, those initial buys at 240, I didn't go all in at 240 when it dropped after that earnings report. I just nibbled a very small amount in the 180s, very small amount in the 170s. Then I started getting more aggressive as we got towards the mid hundreds. And then, of course, under $100 when it was in the 80s, 90s, 110s, 120s. I was buying 100. I was buying, even more Meta. So now at this point, guys, I got to look at my long-term account, because another thing I talk about, guys, is I don't check my long-term account every day like some people do. I mean, to me, what's the point of that? I don't get that. I mean, if it's a trading account, of course, you got to check it however much you want, depending on what kind of trader you are. But, if it's a long-term account, we'll end off on this, guys. If it's a long-term account, I'm just checking it maybe once or twice a month. And if it's one of those retirement accounts or a long-term account where it's truly set it and forget it, maybe it's just a bunch of ETFs, which I do own ETFs, VOO, VOT, VXUS, REITs as well. I do have an account like that. I barely check that. I'm going to be honest. I just, dollar cost average, barely check it. And that's kind of the way to go, in my opinion, for most people. What do you guys think? Because if you're checking your account, your long-term account, every day, think about it. This is an account that's truly meant for 5, 10, 15, 20 years out. And we're going through a lot of craziness right now. If you're checking this every single day, and especially if you're an emotional person and things are going, things are swinging from one side to the other, things are going nuts in this environment, you are more susceptible to making irrational decisions in the very short term here if you're checking your account every single day, which is going to stunt the growth of the account. I think Charlie Munger said this. The worst thing you could do is interrupt the compounding process. I mean, you guys have heard that quote. I don't know the exact quote, but you guys know what I mean. The worst thing you could do in investing is panic sell and really not let your money work for you. And the beauty of the stock market is, guys, the compound interest aspect, which doesn't really kick in until once you get the ball rolling a little bit. And the worst thing you could do is interrupt it before the ball really gets rolling, if you guys know what I mean, to put it in layman's terms. So with that being said, what are your thoughts? Let me know in the comments. We're going to end off the video on that note. Hit the like button. Feel free to subscribe to this channel and my second channel, Stocks Talks Money. And if you guys want some free stocks, use those links down below. Up to 15 stocks from Moomoo and up to 12 fractional shares from Webull. Free money, guys. And if you want to, support the channel, all those links down below. Support the channel. And with that being said, I'll catch you in the next one. Peace out.